And welcome to the Challengers Podcast. I'm your host, Zach Miller from Tearsheet, and with you is my co-host, Josh Liggett.
What's up, Zach?
You need no intro?
No, definitely don't need an intro.
And to be honest, we're a little bit somber today. We thought this would be a good time for a post-mortem on JP Morgan Chase's Fin experiment.
Yeah, we're both devastated. It's really, as representatives of the Challengers podcast, to see Finn go is really affected me. I don't know about you, Zach, but really affected me. And I had to, I had to get something out because I was so affected by it. So actually, I wrote a eulogy for Finn.
Yes, please go ahead.
If you don't mind.
Let's hear.
So first of all, I need some background music. So editor, I need either a Bittersweet Symphony, Time of Your Life by Green Day, or I Want to Know What Love Is by Foreigner. So if you can keep that in.
So that sets the mood, I think. Okay.
Yeah, very much sets the mood. So Finn, you were heralded not only as a, quote, all mobile bank that gives consumers greater control of their everyday spending and savings, but also of their happiness. Finn, I'm not happy you're gone, and I feel totally out of control. You told us you would, quote, offer us a new perspective on banking through customized tools that help us build savings and reflect on everyday spending, from a daily cup of coffee to a vacation with friends. You had everything that a millennial wanted in a digital bank, and it showed. Since you spent more than a year, you even spoke the millennial language, allowing customers to, quote, do all your classic bank stuff in a completely mobile application. Finn, you had everything that millennial wanted in a digital bank. We could assign emojis to purchases expressing how we felt about transactions. You had an 80s style color palette, which is what all the hip kids are wearing. You provided overspending rules that only lets us spend what we had in our account, aka the judgmental mom and dad API, and had an activity bar showing how much we were spending on stuff like food and drinks, providing a real-time guilt trip to why there's no money in our bank accounts. 2 ways to bank explain directly to us is exactly what we're looking for. We were waiting for the, quote, how long I have to work in order to pay off my student loans completion bar, but alas, it would never come. But what I really miss about you, Finn, is how you're not going to be here for the war with the challenger banks. I wanted to hear Uncle Jamie gloat about how his digital bank is going to kick all the newcomers' asses, crushing all the pretenders, and see you, Finn, emerging victorious, with the heads of all the challenger banks mounted on Uncle Jamie's wood-paneled wall. But now that you're gone, we can only dream of what could have been. Or keep watching, since apparently JP Morgan is already working on another digital bank.
That was epic, Josh. And I think what we have to emphasize here, a lot of the language that you used was actually the language that JP Morgan itself used when they launched Fin. Is that correct?
Yeah, that's correct. So the language of helping with managing everyday happiness is a direct quote from their freaking, here, I'll read it. Chase to quote, this is from Business Wire, okay?
This is from
Chase,
the PR associated with the Fin launch, right?
October 23rd, 2017, Business Wire. Chase today unveiled Fin by Chase, a new all-mobile bank that gives consumers greater control of their everyday spending, savings, and happiness through a completely mobile experience. It reminds me of like freaking Silicon Valley when they were making that joke about like all the people pitching a TechCrunch Disrupt, and they're like, we're changing the world through all mobile, blah, 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 like whatever. It's just like, looking back, I can't believe that someone actually cleared that to go in a press release.
So what this is like, post-mortem of like the first internet bubble when like toys.com went belly up. Like, what were people thinking? Did this have a chance like to be successful at all from the start?
So part of me wants to imagine that it's Jamie Dimon being a galaxy brain and being like, there's a galaxy brain meme, which is one of my favorite memes. So like,
I feel like Jamie might have actually written this press release himself.
Very possible. So like the galaxy brain meme is let me pull it up. Like one is a great example is, like a regular brain is to take sleeping pills. Like a smart brain is to taking pills with a drowsiness side effect. And the galaxy brain is to drink caffeine to dehydrate yourself, making yourself tired. So like part of the galaxy brain, I think, is like Jamie's like, or people at JP Morgan like, you know what? Let's just kill all the digital banks and go back to tellers. We should just go offline fully. Let's go back to the 1500s of banking. Let's go back to the Medici's in Italy and go back to that system. That worked. Why don't we just go back there to as N26 and Revolut and all these other banks are coming to challenge us? Like, it's just, did this ever have a chance? I mean, the fact that they gave up on it
so quickly
shows
they haven't
that
even started.
Yes.
Well, I mean, I feel like it kind of was doomed from the beginning. I don't know if we've said that on the podcast before, but like the Chase app itself is quite good. And if you're going to look at what Chase has versus an N26 or Revolut, like Chase has a Chase brand. And all of a sudden now you're going to rebrand it to something cool and hip when you can't even get the language of cool and hip people correct. Like
Dr. Evil trying to be cool and hip with the Macarena, from
yeah,
Austin
I feel like a 40-year-old probably wrote this press release and aimed at a product for 25-year-olds. It totally misses. There's nothing fun. There's nothing cool about it.
Well, come on, they had an emoji that was one of the section was emoji to talk about your
And
feelings.
honestly, in 2017, we were expecting emoji banking really to take over. So yeah, they killed this very quickly. It really didn't even have time to go national. Like they did the pilot project in St. Louis, didn't do great in St. Louis, and they launched it nationally. It didn't do great, and then they just pulled it in, and it was like, and we're done.
Yeah, it's weird. Like I agree with you that I don't have JP Morgan in terms of I never used them as a bank, but I've in the past I've used JP Morgan, QuickPay, and that was a really awesome initiative that they come up with. This isn't a bank that like can't come up with interesting products. They come up with interesting products. They have a great front end. Like you said about, that with your experience of working with of talking to people and talking to people in the industry and knowing about what's going on with that. So it's surprising to me, and they're also freaking the biggest bank in the U.S. So like, it's surprising to me that they gave up on this so quickly. There's a report that they're creating some like skunkworks project in London, which no one knows what exactly it is. Whether it's like a blockchain project or like a.
Well, I hope it's not another challenger bank aimed for the UK market because that's quite competitive over there. But
come on, no big deal.
Yeah.
It's JP Morgan. They'll just probably spend a year and a half and then shut it down. But it's like I agree with you. It's surprising that especially now that when there's all these different reports like we've been talking about for the past, I don't know, year, that all these challengers are eventually going to open up in the US. I think that maybe they don't want to, maybe they're scared that if that happens, they're going to really get beat and they can lose leverage versus coming in and seeing what their offering is and then changing from there. That's the only thing that makes sense. But then why did you even start in the first place? Because it wasn't like in 2017 they thought, oh well, Monzo and 26 and no challenger banks are going to come to the US. Like obviously they were. So
I don't know.
Something doesn't make sense.
What would you say the takeaways here? I mean, I think the big banks, the incumbents, have to play to their strengths. And I think the strengths are the branch network for better and for worse, and for their brands. To start a new brand for a new audience, it's going to be very hard for an incumbent to tap into that.
Yeah, this reminds me, now that you're saying it like that, there's a book I just finished about the fight between Netflix and Blockbuster,
Mm-hmm.
it was a really interesting book, just because a lot of things that I didn't realize necessarily at the time were that when Blockbuster offered their combination of location and digital product together, Netflix was basically like, we can't beat this. They couldn't beat that combination. They were once, when Blockbuster had two separate entities of online and branches, Netflix was kicking their ass. And then Blockbuster figured out how to put those both into one package. And Netflix was like really on the ropes for a while. And basically Blockbuster had to implode in order for them to win at the end. So using that same model, if banks can figure out how to create a bundled product, not just because there are some people who I would assume want to, get certain services that you can only get in a branch that you just can't get digitally. And it could be that, that something like that can actually, if you have a very good, a solid digital product, as well as the addition of a bank, theoretically, of a bank branch, you theoretically could do a great job of competing or thwarting, challenger banks.
I agree with that totally. And I think there is some conflicting data about millennials, if that's really what this conversation's about. And there's certain subset, or it's hard to define an entire generation, but um, there are products I think where, you know, having a branch experience is really important, particularly in borrowing for mortgages. Like, you know, it's a complicated product. It's the biggest financial investment most people make in their entire lives. So it's, I don't know. I feel like this was slated to be a failure from the beginning, and um, it took, you know, it took 2 years basically to shut it off. But so let's use that as a segue to talk about the other things. You kind of alluded to those these other things, but like, again, Monzo and Revolut are in the news about coming to the U.S. I know we've been talking about that for like 2 years.
They're coming.
They are
It's happening.
coming.
They're coming.
Like Monzo, like officially launched in the U.S., even though I don't think they actually have a product in the U.S. yet. And Revolut supposedly is getting their act together. I don't think either of them are getting U.S. banking licenses. I don't think this is alluding to the fact that they've gotten a license. I think they must be coming in through partnerships.
Yeah, they're probably. I assume they're going to piggyback like they did at the beginning in Europe, because it's a huge. You have to open in every state. It's a huge pain in the ass. Like, it's not easy. It's not. The U.S. is not. There's a reason why a lot of these challenger banks are opening in the EU.
Yeah,
because you get like how many countries?
You get one license and you get access to a variety of countries.
It's just easier. So like, even like there was a, you know, I remember talking with some banks and they're like, "Are we going to go like they were thinking about going EU versus UK." You know, there was when with Brexit like like a year or two ago, and there was no thought to go to America. Like at that time, a lot of them just didn't even consider it. And it's not like European, you know, companies don't go to America first. Like there's a very big history of, you know, of definitely European companies. If you're based in Europe, you can open in America. You know, there's definitely a bunch that do that already right now. But it's just it's easy. It's just because it's easier. And so the fact that it's taking I think that they put out the press release to say that they're coming, and then I don't know if the marketing department wasn't talking to the legal department. It's very, you know.
I hope that was synchronized.
Yeah.
Revolut also in the interim launched in Australia, which I think is interesting because that is probably a very though it's competitive, it's a good digital banking market. But meanwhile, as these European companies are trying to figure out their launch strategy into the U.S., we're seeing more and more quote unquote challenger bank I guess competition. And I would say these are companies that came in from different angles, right? So like even a Stash, right, which is really an investment app, has rolled out banking over the past few months. We've written about that on the site, and bills itself as a challenger bank. It really kind of doesn't depend the trajectory, but eventually they get to a place where you're holding sort of depository assets. Dave launched this week, and this was a launch that we covered on Tearsheet as well. Dave was really cool because Dave like has been going for about 2 years, kind of under the radar. It was a personal finance manager that I think its biggest value add to users was that it kept people out of overdraft. And I spoke to the founder and CEO for a podcast this week. And one of the things he said, like, you know, we're used to throwing around this number like $34 billion of overdraft fees in the US every year. The average payment that actually triggers an overdraft fee for most people when they go into minus in their accounts in the US is only like $20. So you're talking about like, you know, this really weird series of events where like somebody needs to dip in just for a small piece, yet they get charges like, you know, sort of outsized penalty for doing that. And so one of the things that Dave did early on was give people $75 worth of just kind of like, it's almost like a spending account. Like if you go into zero, they'll front you the $75 so you can go get gas or go out to dinner and then pay them back when you get paid your paycheck. And they built, and they hadn't talked about how big the audience was, but they had like 3.5 million people using this app, or registered users, I shouldn't say using. And so that's a pretty nice audience. They're one of the most reviewed apps on you know, fintech apps anywhere. And so to me, it would make total sense if you're a PFM and people are relying upon you to help them with their expenses to launch a bank around it. And that's what they did this week. They also announced $100 million debt financing from Victory Park. And I think it's going to be a viable competitor. I mean, I think the brand is cool. The brand has definitely figured out how to speak to millennials, and actually not only just talks to millennials, but built a product for millennials. I think that's one of the differences between this and Fin. They really thought about like what do millennials need? And so that was one thing that they hit on early. They also help people find gigs in their neighborhood, like from the gig economy. They've done partnerships with some of the platforms. They're going to continue to roll that out for bank account holders. To help somebody with their spending and with making a little more money. That seems to be like kind of, at least it was well thought out, as opposed to Chase, which I think was really just kind of saying, let's take what we have and kind of rebrand it, reskin it, and make it sound or feel cool. And I think you're going to see more of these types of apps mature over time.
Yeah, definitely. Something that's really interesting. Well, first is I'd love to see stats like when people go overdraft. Is it like when if it's like like the day that their paycheck is supposed to hit? That would like suck if you're overdraft for like an hour. You know what I mean?
Right.
So like I'd love to see statistics like
how
when
long do you spend in overdraft mode?
Yeah, if it's like an hour and you get like nailed with it. But like I think what's really interesting is that Chase, like with Finn, they had this. They had an alert that you're going to overdraft. What they didn't have was what you're talking about, this like $75 sort of like parachute, which is obviously there's more risk, and you have to understand risk assessment, and you don't want to go out of business because somebody takes $75.
That out, yeah.
Oh, I would assume. It doesn't seem like the hardest. And I think they, if they had 100 million people, on their, on their app, and everyone went down $75, I think they'd still be okay.
Mm-hmm.
You know what I mean? Like theoretically, like they have so much freaking money. Like it'd be just like it's nothing for them to figure this out in order to onboard and take that risk. But it's what you're sort of agreeing what you're saying. It's thoughtfulness was put into what's the actual product going to look like in order to solve a problem, and not just be like, hey, by the way, ding ding ding, you're going to overdraft, we're going to charge you X amount of money if you don't put more money in your account, versus like you went to overdraft, hey, we're going to cover you. Maybe I don't know, maybe Dave eventually moves to a model where they reward people who don't go into overdraft, or do some sort of education model, which would be really cool. But I think that's something that's really thoughtful in terms of what they did in terms of in creating the product. And the other thing is something you and I love talking about, and we've spoken about a lot of times, regarding just how they're onboarding people, is that the unbundling, rebundling, unbundling again, et cetera, et cetera. So what we're seeing now, I agree with you, is personal finance apps and just anything in or around fintech coming out with a product that fits a market, onboarding them, getting people to not get sticky with them, but sort of like them. I think it's like a level below stickiness. And then do things that then say, hey, by the way, you're doing all this finance with you, let's just do the banking, which essentially is the ability to send, hold, and and receive money, which you could do anywhere theoretically. I could, if I want to, I could use TD Ameritrade as my banking account. It wouldn't be the best use case, but
also
I could.
Your mattress.
I could use my mattress also, which many other so it's something that I think we're going to see. And what's really going to be interesting is, especially with open banking and with challengers and all that, is how you're going to have a tremendously distributed network in terms of where people are like to spend most of their time in terms of banking, and how that shakes out in terms of where if it just becomes like a huge long tail of just people of different applications that people just like for banking.
So to that point, I think that the industry is sort of maturing a little bit. I would say the first few years of this challenger bank 2.0 like trend, because this is obviously not the first time we've seen challenger banks. They've been around since the advent of the internet. But I think what we're seeing now, like originally it was just a race, like to quote, we're opening 10,000 accounts today. Well, we're opening 15,000 accounts today. And everybody really knows that the vast majority of those are, sort of sit fallow and no one ever really uses. Certainly they don't use them as their, and this is broad strokes, but they don't use them as their primary bank account. And so like what's interesting now, Dave, when it launched, really thought about, well, how do we become somebody's primary bank account? Well, to do that, we need to get them to deposit their paycheck, right? And that's what everybody's trying to get at, is like, how do we get that direct deposit paycheck? And then providing incentives around it. Well, if you do deposit that, what do you get from us? And I think you're starting to see, I'm just mentioning Dave because we were on the subject today, but every one of the challenger banks say, well, we need to evolve from just saying we're just opening mass number of accounts to how do we get people to use these accounts? And all of them are thinking about ways to incentivize more daily usage of these accounts. And it does all center around that direct deposit.
Yeah, most definitely. It's that, and that's the way you can just get some like. It's something that's really necessary. It's something that we touched on with Chime,
Hmm.
a couple weeks ago. I couldn't agree more and it's a trend that I've been seeing a lot. Also, is an emphasis on trying to get how are we going to like starting with that and then building the bank around
Hmm.
that concept and other services on top of that.
Right. It's almost like we need some software that gets people like hooked on it, and then once they're hooked and dependent upon the app, how do we provide ancillary banking services into them, as opposed to the other way around?
Can we
um,
call this software heroin or cocaine?
well, it would almost be not heroin or cocaine. It'd be like
Cheaper
no,
coffee,
yeah, it would be the things you would need once you are high. Like, what else do you need?
tacos,
Yeah, tacos, fish tacos particularly. um,
Cheetos.
I think we have time for one last just mention. There was an article in the Financial Times this week about UK challenger banks stumbling. I guess that was the language it used in a stress test. I don't know if these were formal stress tests. It wasn't very clear to me exactly what was going on. But if you're looking at a challenger bank, and as they start to mature and get more and more of accounts, they're going to be viewed like a regular bank, right? That the language of challenger will eventually drop away. It's just a bank, particularly if they're lending out their own capital. So they will have to abide by the standards that the regulatory system does. And so, these companies are in growth mode. They're thinking growth, not protection or safety. So I assume that their risk modeling is probably on the far end of the spectrum. And so we'll see that, regulators start to try to bring them back into the center. And if obviously there's a downturn in the economy, I think, there will be a massive shakeout because some of the guys won't be able to survive this.
Are we going to see a margin call style movie for challenger banks? I would be so happy if to
That'd be
see that
great.
with where this happens. I
Who would be
I
the
mean,
heroes and who would be the villains?
Jamie Dimon would just be it would be both.
Oh, he could be on both sides. I could see that. Kind of
I
like a
don't.
double
Well,
agent.
it depends. It depends how it shakes out. I think it depends how it shakes out. If with not to spoil Margin Call, everyone should watch it. Awesome movie. But even though it's been out for like I don't know 10 years or whatever, but like it really depends if the regulators don't necessarily um, are able to pull them into the middle. First of all, there's this just idea, and all the bankers that are listening right now know exactly what I'm talking about. Is just the idea of formula, how important formula is, especially after 2008, just from every aspect of a traditional bank that you have to stay in formula, both from a consumer side and also from the bank itself side. It's just the importance of that it's been there forever, and it's a lot of it's placed by the regulators. The banks would probably like to get a little more aggressive, if I had to guess, but the regulators, force them to be in a certain way. So, first of all, what's interesting is, let's say, how is a bank going to actually be the challenger bank going to put into formula if they're piggybacking on another banking license? How's
Mm.
the monitoring going to go? How exactly is that going to work? How are they going to look into the accounts? What are the rules going to be? And second of all, if an issue comes up where you know people lose accounts or people lose money, is it going to be seen like almost like a Theranos, where they knew this was going to happen, but they just thought that it was going to be okay, and then just one card came out and the whole castle came tumbling down. So I think regarding who are going to be the heroes and villains, it depends. It really depends on if if the challenger banks want to actually create. And the theory behind the challenger bank isn't just like, hey, I want to create an all digital bank. It's the idea of people are unhappy with the banking system and they want something new. That's what the root of all this is. And people are unhappy with their banks. They're unhappy with what happened post 2008. They're unhappy with fees. They're unhappy with all these other things. So, and that's why the challenger banks came in. Now, if the challenger banks turn into regular banks in terms of their attitude, then people are just going to be pissed off with them as well, and you're going to have a vicious cycle, which won't surprise me if that happens, honestly, because that's just the way the world works.
Hmm.
So it's really what I would hope that that the challenger banks are not going to be in a situation where they're going to try to put themselves in a position where they're really out of formula and risking people's um, you know deposits and savings. But it wouldn't surprise me.
Yeah. So I think that's definitely something we should see. And I agree with you. I think the way of the world is that, you have these sort of upstart in your face companies, and as they grow and mature, society or whatever kind of, pigeonholes them back, and they commit a lot of the same errors that the industry that they were trying to disrupt had done. We're not anywhere near there yet with the challenger banks, but I do think many of them have been started with an ethos to say, yeah, it's not just creating a digital product. It's like we want to remake sort of the entire baking industry, and we'll see where that leads. We don't know yet.
Yeah, no, definitely agree with that.
Well, thanks, Josh. I think this was a great episode. I loved your eulogy. That will go down in one of the high points of Challenger podcast.
I was crying. I don't know if you heard it. I was crying.
I was touched.
I was very emotional. I was very emotional.
We'll see what Chase comes out with. Out of the Skunk Works project.
Yeah, it's or who knows what it is.
Exactly. Well, thank you everybody for listening to us, and we'll catch you again soon.
See ya.